Good morning, everybody. Welcome to this live stream. I'm joined here today with Brian White from Future Aza. We've got Jeff Lutz as well. So we're going to talk about the news that came out yesterday. Rivian has partnered with Volkswagen, right? And they talk about here $5 billion lifeline in joint venture with Volkswagen. But when we dive deeper and we find out what exactly this relationship is, you're going to find out that this is the way that the media has taken this is taking a life off on its own. And until you dive deeper into the words that they use, you'll learn more about what's happening. So here's what happened here. This is the Rivian, very beautiful products. Their cars are awesome. And the problem is that they're losing so much money. They're about to go out of business. This is RJ Scaringe, and you got Oliver Bloom of Volkswagen, massive, obviously one of the biggest OEMs, automakers in the world. And this is what RJ said. This is exciting. Volkswagen Group CEO Oliver Bloom and I are thrilled to announce the formation of a joint venture between our two companies. This partnership brings Rivian's software and zonal electronics platform to a broader market through Volkswagen Group's global reach and scale. So they're making it look like that Volkswagen is partnering with Rivian for Rivian's software. That's why they're doing it, providing an expected $5 billion of capital to Rivian as we bring R2 and our next generation of vehicles to market. And the big word here is expected $5 billion. So we'll dive deeper into that. Jeff, why don't you just kick us off? What's your thoughts when you saw all this?
Yeah, I mean, first off, I like the fact that this validates that EVs are the future. Legacy Auto is investing billions of dollars to partner and to advance EVs as the future of the automobile industry. So, first and foremost, I would say that flat out. Two, Rivian is close to me, a couple hours south of me. They're building these vehicles in Normal, Illinois. Big fan of the company and the work that they do. I've been critical of kind of the approach to unit economics, cost structure, OpEx, and believe the company still has work to do regardless of any partnership, right? Partnerships have come in and gone, right? Mercedes, Ford, and so forth with Rivian, and they still have an existing Amazon partnership and major investment. These partnerships can come and go, but you still have to really understand and drive the underlying cost architecture, in your products, and design for value, and really have an underlying OpEx structure, the kind of the cost around the factory and everywhere else in the company that aligns with your volume ramp of the product. So I'm excited that this validates EVs as it's another validation of it. It doesn't change the fact that Rivian needs to drive for profitability, and they've done a huge redesign on their product line to drive for that. And of course, the next product lines are lower cost vehicles, but they've got to drive that underlying cost structure so that they can drive their gross margins up. So and then once you get into the deal, maybe we'll talk a little bit more about it. It's not just a bag of money that is landing on the port. And many of these deals, you really have to get into the fine print, and there's contingencies. That's why you saw that word expected that you appropriately called out on the $5 billion. It's $1 billion upfront, but that's not a bag of money either. There's basically a partnership that's forming and an exchange of information between the two companies, and really trying to leverage both of their strengths. So I'll pause there.
Thank you. So, Brian, you've been following partnerships quite closely. You can tell us more about the partnership that Rivian did with Ford, that Rivian did with Mercedes, which we'll cover also. I've got information on that, and that Volkswagen have partnered also with Xiaopeng. So all of this is happening. What's your thoughts, Brian?
So first of all, when I heard this last night, I thought this was very good news, and I still think that Rivian needs a lifeline. Dilution was not something that was unforeseen. They're going to have dilution. They are burning money like crazy. 1.75 billion last quarter. So getting a fresh billion buys them months, maybe optimistically. We did see a story recently, yesterday or the day before, saying that When Rivian shut down to retool, they were able to eliminate a whole lot of steps and introduce a whole lot of cost savings. It'll probably take us some time to see how effective that has been. They've also done layoffs, so they understand that their costs are out of control. When it comes to some of the partnerships, I had the opportunity to speak with someone in the know about the Ford partnership. So what had happened was years ago in 2021, I think, Ford showed off their new electric F-150. It wasn't called the Lightning yet. They had a great little commercial, a demo where they brought out real truck people and drove this truck, and then they pulled a locomotive with it, and it was very fun and exciting. And they were set to debut this vehicle, to actually show it and put a date on it when Rivian did their announcement. And Rivian saying, yeah, our truck is going to be out. It's 300 miles of range, whatever. And Ford said, 300 miles? You must be joking. Ours is 150. So the Ford engineers had a conversation with Rivian, and that's when they decided that they needed to partner with them because Rivian knew how to do things that they did not. So Rivian has very good engineers, very clever people working for them who are EV first. They are first principles on EV, and they get it. Can they get it profitably? Well, that's proven to be a lot more challenging, but at least they've got the right pieces. So Ford was able to borrow enough of their technology that by 2023, they exited the partnership. It no longer made sense for them to continue with that. And this was good for everyone. When it comes to this particular deal, we know how desperately Volkswagen is struggling with their software. Their Cariad program had 10,000 programmers, which for those scoring along at home is the wrong number. You don't need that many. That's wrong. So what they're doing is getting someone who actually understands the software. You look at the article, it says it is not drivetrain, it is not battery, it is just the software. They're very clear about that. So what that means is the software integration between battery management, between all the infotainment, between all the switches is really hard to do correctly. And it looks like that is what Volkswagen is looking to essentially buy from them. In terms of the financial part of it, is it $1 billion? Is it $5 billion? I'll leave that to you guys because you understand that a whole lot better than I do. But it's interesting.
Okay. One of our audience members, I'll bring this up later, but he brought up the point. He thinks that the deal is much more for Volkswagen than it is for Rivian because of what you just said about the software failure that Volkswagen has. But no, I don't think so. Rivian is in big trouble. They need money. But let's take a look at more of the information here. So Omar was able to, he's really on a roll last night. He was explaining a lot more about this deal. He's pointed this out. Volkswagen says they have not yet made a final decision on whether to form a joint venture with Rivian. They say the final decision is dependent on all these different criteria. The final results of the further review of the technical feasibility of the integration of Rivian's electrical and electronic architecture in Volkswagen vehicles, further negotiations between the parties, regulatory approvals. So if it's dependent on further negotiations between the parties, it means this really wasn't done yet. The actual establishment of the joint venture depends on a series of different parameters. In particular, the final results of the further review of the technical feasibility of the integration of the EE architecture in vehicles of Volkswagen, the further negotiation between the parties, as well as regulatory approvals. Against this background, a final decision on the establishment of the joint venture has not been made yet. In case the joint venture would be established successfully, Volkswagen intends to make further investments in shares of Rivian. So they put in $1 billion now, and they're reserving the 4 others to later. And of course, media saying, hey, they got $5 billion. This guy, Hendrik Holm, said the $1 billion investment had to be made under the guise of some dubious technical benefit rather than dilution at a discount valuation. So really, it was a $1 billion investment, and it is kind of totally discount, right? The shareholders of Rivian are just getting screwed here, but they're about to die, right? So they needed this. The headlines are $5 billion for joint venture, not $500 million at $10.84 book value and interest. What's your thoughts on that, Jeff?
Yeah, I think that's important to know that if you're buying Rivian stock today at $15 or $16, Volkswagen's buying it at $10.83 in volume. So there's contingencies on this deal. This appears to be a very firm handshake, and there's a lot of contingencies involved to really unlock even the 1 billion, let alone the remainder of the 4 billion. So none of this is really a foregone conclusion. Again, I think for the future of EV, it would be great if you just kind of fast forward into 2026, and it'd be great if Tesla has their new low cost platform ramped at scale, and that Rivian's introducing their lower cost platform. It is good for the EV industry, that both of those partners would be out there and driving volume, because it'd be taking it away from ICE. So just my views on it. And this deal looks like there's a lot of wood to chop, but to get from where they are today to getting to something that, where there would actually be a meaningful exchange of funds and investment, into Rivian. So I think there's more to go on this. Finally, just one of the things I've seen in some of the articles, like Rivian be able to leverage, the Volkswagen, global supply chain and scale. That is something I know extremely well. And I will tell you, in these situations, that sounds good pre-deal, but when you actually get into the mechanics and real procurement that goes on, of all right, I'm buying this, you're buying that, there's going to be almost no part number overlap. There's going to be almost no procurement overlap. There may be very little supplier overlap, given where manufacturing is occurring for Rivian, and where most of Volkswagen manufacturing is occurring. So when you say that, you really have to understand what is the volume per SKU or per model. And if you can't get basically a major reduction in the number of models between the two companies, and to drive up the scale per model, you're not going to really get some massive procurement leverage of Rivian partnering with Volkswagen. And there's, by the way, I haven't seen any implicit terms of Volkswagen exposing pricing or procurement partnerships with Rivian in this as well. But just, I wanted to put that out there, because those are pretty precarious. And sometimes people get those delusions of oh, Rivian's got a cost problem, and now they've got, a parent or a daddy that has tremendous scale. And I'm just telling you that you really have to look at it at a volume per model perspective, and you'll find that these things don't always work out the way that they're planned.
Yeah.
I would agree with all that. I'd say that with Rivian, and by the way, let me know if my volume is better. But with Rivian, the big thing is, unless they're going to be switching to Volkswagen turn signal stocks, there is no pricing advantage for Rivian. What Rivian desperately needed, and the reason they took such a discount on this block sale, was because they need cash. Without cash, they're done. So a bad deal is better than no deal. And I've seen comments here saying that that VW needs Rivian more than Rivian needs them. I would disagree. I think Rivian is perpetually in a state of existential crisis, and that Volkswagen can continue selling cars with, let's be polite and say, lackluster software, and still do okay. But it's definitely time for them to step up their game, and I think that's what they're trying to do.
Here's another reason why Volkswagen did not need Rivian at all. Again, Omar from Omar's catalog pointed this out. Look at this joint sourcing program between Xiaopeng and Volkswagen. Look at the date, February of 2024. So just a few months ago, Volkswagen announced a partnership with Xiaopeng on, guess what? Software. So they entered into a master agreement on platform and software strategic technical collaboration. Joint sourcing program sounds very similar. The joint development of B-Class BEVs under Volkswagen brand has achieved a major project development milestone. So they partner with Xiaopeng, and then now you hear Rivian partner with Volkswagen for technology platform joint venture. It sounds very, very similar, right? And then to talk about partnerships, Rivian backed out of Mercedes-Benz after 3 months. So this is December 2022. So this is 23, January 23, like that, a year bit ago, they backed out. So you've heard these joint ventures before, and Mercedes-Benz and Rivian were supposed to partner, establish a new European factory. The two companies signed a memorandum of understanding to establish a joint venture to invest in and operate a factory in Europe. But then 3 months later, just backed out of it. So, yeah, what you're thinking about what you just saw there?
Well, I would say on the Rivian Mercedes one, I never understood why that partnership would make sense. Mercedes already has an electric van factory in the US. They do sell some. Those are made in the South somewhere. And they're pretty good trucks, unless I'm thinking Ford, but I'm pretty sure it's Mercedes as well. But they want to get into each other's markets, but the products are very, very similar in terms of specs, in terms of pricing. And yeah, I don't know why they would have even done it in the first place. And yeah, we have seen a lot of the partnerships wind up being nothing. But I think that if you've got a good product, and in this case it's the software, get as many dance partners as you can. There's no reason you wouldn't want to license it to as many partners as you could. And maybe that's what Rivian ends up doing more of if they can't make money building and selling cars.
Jeff, is $1 billion enough to save Rivian?
No, I mean I think they burned 145 to 15 or so in the last quarter. And again, when you look at a burn rate, you can't burn yourself to zero. That's when you go bankrupt. So you have to be, and you have to have free cash flow throughout the quarter as well. So they had runway into next year, but yeah, $1 billion with a lot of contingencies tied to it is definitely helpful. But they have to meet these contingencies, and then to unlock anything beyond the 1 billion, there's definitely Rivian has given basically 5% of their company up at the $10 price level. This is a company that I think in November of 2021 was $120. So it's down 90% at its all-time low, and it's further diluting itself. So yeah, $1 billion. It's a lot of money, but when you look at their run rate, I mean, honestly, it's 2 months of their current run rate. So they need to chop their run rate down, and that's part of the struggle, right? Is when you're trying to ramp, you're actually spending more money. As you try to achieve scale, you're actually spending more money. But they have to figure out how to take the non-recurring side of their spend that's not tied to production and not tied to production volume. And they've got to figure out how to continue to drive that lower. They're smart people. I'm sure they're working on it, but they've got to make more progress and do it very quickly. I'm going to be interested to see what the new vehicles that they have relaunched now at the lower price point, what they are when they get to scale. Because initially, again, you've changed tooling, you've changed parts, and you're going to be at a lower run rate. So they're still going to have a cost problem here in the near term. The other thing to note is I think their investor or their shareholder day is tomorrow, their shareholders meeting. So I think they needed, I'm not saying that this is all kind of like some diving catch, to have something to put in front of the shareholders, but they definitely, needed a plan of like, okay, you burned 115. What is the plan? And I think they needed something obviously going into this meeting as well. But again, overall, I'm pleased to see validation of the EV space. Volkswagen, interesting. I mean, just how many lines are they going to cast out? And what's going on inside of Volkswagen from a product strategy perspective? It looks like Rivian really took this active lifestyle product, and which I think Volkswagen was trying to have this Scout line and trying to and it looks like, Rivian's got it. Like they've got, some brand equity there. So see, I think I'd summarize and say $1 billion isn't a lot, and it's something, but it technically it's 2 months of runway with what how Rivian's been spending. So we have to figure out how to take their burn rate down, and then just honestly what's going on inside of Volkswagen. How many lines are they going to cast out?
This is from Alex Voigt. He's well-known Tesla community retail analyst from Germany and Europe. And he said this: the joint venture between Volkswagen and Rivian is nothing else than a further consolidation step in the automotive industry, showing that two auto companies are under pressure and desperately searching for someone that solves their problems. That usually doesn't work out well. So this conversation between who needs it more. You got Rivian losing money. They need it. They need it badly. You just pointed out they got things coming up in the near future. You got Volkswagen partnering with Xiaopeng a few months ago. Now partnering with Rivian, throwing $1 billion. So there's this idea that others, and I think Steve Mark Ryan even pointed this out, right? When the company's about to die, there's 3 steps that they follow, right? First, they say, I'm going to do it myself. Then they go and try to partner, and then they go bankrupt. But basically, does this reek of desperation? What do you guys think?
I don't think it does. I think, Rivian was already desperate. No one was questioning that. Volkswagen, as Jeff pointed out in the comments, Jeff Songster pointed out in the comments, very stubborn. And so this is, if anything, a slight improvement over the disaster that they have been in recent years. So I don't think it's that. I think, and in terms of consolidation, I don't think Volkswagen wants to own Rivian. I think they just want to get the software so that they have something that works, and maybe that becomes a long-term partnership. But I don't know. What do you think, Jeff?
No, I don't. You don't want to pick up something that's got a $1.5 billion, $6 billion annualized burn rate. That's a hot potato, and you'd have to be pretty naive to think that you could fix that overnight. If you're VW, if you're Tesla, maybe it's a different story. As they're fairly aggressive and they have a lot of parallel or similar assets, so there would be probably a lot of redundancy. I'm not saying that that's a tie-up anytime soon, but yeah, it's not to fully acquire Rivian. First off, there'd be a lot more capital, and second, you really have to figure out. You really have to see the other side of this almost a year from now when they're at scale with their redesigned vehicles. How are they doing? Because Tesla found a way to getting to near break even and on their way to profitability before the Model 3. So they had a much lower burn rate when they were doing the S and X. And I'd be interested to see if Rivian can grasp that formula.
Any comments on how this has impacted us Tesla investors? You said at the very beginning, this is a validation of the EV market. That's weak, but nothing, right?
I mean, how does it affect us as Tesla investors? Number one, Tesla's up today on the news. Again, I do think it validates that legacy automakers are making multi-billion-dollar investments into EVs. I think it also validates that if you develop tech that is deemed to be valuable, that it will be sought after, and so I'm sure Lucid is probably looking. This is probably a good thing for Lucid if they need capital injection, right? They have the Saudis, but they've got arguably one of the best powertrains. I think Tesla may leapfrog them, but in terms of power management and powertrain, they're up there, Lucid. And so yeah, I think it validates that the technology is important. Remember, I think Brian's story was really good about Ford's first go at it with the F-150. They were off 100% in terms of the range that they were driving, like just a complete swing and miss. And the other legacy automakers trying to make EVs, none of them have figured out how to make it profitably, including non-legacy. So I think you're going to continue to see consolidation, right? This is another thing. What's happening with auto? Auto is not growing in terms of globally. So you may see further consolidation under some stress here. So we'll see.
Okay. Talking about stock, here's what's happened to Rivian stock. So when this was announced, Sawyer pointed out that the stock shot up 30% after hours on the news. The company said they will develop next generation battery powered vehicles with leading edge software. Tesla already said that Wedbush analysts raised Rivian's price target to $20 after the $5 billion investment. Again, they're calling it $5 billion. Huge win for RJ and Rivian. Takes capital worries off the table, says Dan Ives. With Volkswagen support, Rivian is set to scale production and cut costs. And then this guy, Spring Tesla, pointed out that when Volkswagen invested at $700 million in Xiaopeng jumped, the stock jumped $15 to $23 in 2 days. Today, it's at $8. So while collective action can improve efficiency, it also comes with lugging they don't want, because that's baggage. I think that this is probably a translation issue. With baggage they don't want, I'd rather see how their strategy works rather than blindly follow the hype. Short-term trading may be warranted, but long-term perspective still depends on the fundamentals. The $4 billion is not free cash from the sky, and we just said it's not even, for sure. So yeah, stock movements. What are your thoughts on that?
So I would say what Jeff said, which is this particular rising tide happens to lift all boats. So we've got Rivian was up after hours. Rivian remains up today as of 20 minutes ago when we started recording, up about 27% at that time. Tesla was up as well. And I know because every time my trading account at JP Morgan Chase crosses a certain threshold, I get an email saying, hey, we'd love to give you a tune-up and get you out of all that Tesla and into something that pays us. And I always politely decline. But this is moving everything, and it's moving it in the right direction. And I think that's pretty valuable. Did you have anything to add to that, Jeff?
Sorry, I was just doing some basic math for folks. Anyway, no, I mean in terms of, the Tesla Tesla stock is reacting well, but I think it's reacting well for a number of things. It's more than just this. I think analysts now are, we're a couple of days before the end of the quarter, and they're trying to get their notes out in terms of like, are we reiterating? Are we upgrading? Are we downgrading? What's happening with Tesla? And I think they're setting up they're getting their revisions in terms of deliveries for the quarter. And I think they're setting up Tesla to say, hey, look, they're probably going to come in lower than these lofty expectations we had from weeks ago. But, if you look at their 2025 to 2027 runway, this looks like a growth story that could reemerge. So you're seeing either reiterations, you're seeing upgrades, you're seeing even new coverage of Tesla, and it's all been actually quite positive. Nobody's come in and nobody I would think that's a very serious analyst has come in and put the hammer down. They're kind of like setting up this production and delivery event as kind of a buy the news event. Like it may be lower, but that'll be news that you may want to buy. Again, not advice, but I think that's part of the price action you're seeing in Tesla as well today.
Yeah, let's take a look at what analysts are thinking about the Rivian partnership. This is Tom Narayan of RBC Capital, and let's watch this video.
Another stock that is absolutely rocking right now is Rivian. It's because Volkswagen announcing it's taking $1 billion stake in the EV maker, and the two automakers also planning a joint venture that could boost that investment to as much as $5 billion. Now, Rivian stock very heavily shorted. So all those betting against it just got their faces ripped off, and they have to buy it. And that's probably one reason Rivian is up 48% right now. Let's bring in RBC Capital Markets Global Autos analyst Tom Narayan, who just literally moments ago put out a note on it. I scanned it quickly in the commercial break. I know you didn't love the stock beforehand, Tom, but what is your take with this VW investment? Does it change your view on Rivian?
Well, I know for one thing, this is why I'm on the sell side and not at a hedge fund shorting stocks because, you're absolutely right. Getting your face ripped off. I think it's obviously good for the company in that they get much needed liquidity to take them through the next couple of years. Whether or not this allows them to achieve their goals and making, R2, R3, that's another question altogether. But what it does do is highlight something they do have, which is licensing software, right? That's what this deal is about. Volkswagen gives them some cash, and Volkswagen has tons of cash, gives them some cash, gets a big equity stake, and in exchange gets some software. We all know about the challenges Volkswagen's had with software, right? And so we think it's kind of a situation where very different OEMs with two very different sets of problems really help each other out. But it doesn't really answer the question of Rivian as a car company, I don't think. But it does give them a valuation floor for definitely licensing this tech to other OEMs.
Yeah.
Is it worth 45% upside on today's move? I'll have to look at the numbers more.
Okay, so if you buy a Rivian in New York or right in New Jersey right now, for the most part, you go to Williamsburg, Brooklyn, or just past Williamsburg actually, and you buy it, and that's where the service center is. And when you talk to Rivian owners, service is a part of it, right? And I thought it's not in the details, Tom. So we're going to speculate here. But when I heard about the deal, it's not just the liquidity, i.e., money. I thought, could we see VW dealers start to sell the R1S and the R1T and the next generation of cars, and also be a place where you could go locally to have your Rivian potentially repaired rather than having to get it picked up and shipped off to a service center, which may or may not be near you? They're not saying that, but to me, it just seems to make sense.
Well, both companies had a conference call after the announcement.
Okay.
I cover both stocks.
I did not hear it, so maybe they said it. I don't know.
Yeah. VW is vehement that they're just going to operate as separate companies altogether. Remember, VW wants to penetrate the U.S. market with its Scout brand, right? Pickup trucks and SUVs, which is going to go head-to-head against Rivian. So for VW, it's all about software. I don't think it's about selling Rivians, that sort of thing. They're going to be kept separate. It's really a software deal more than anything else.
How much of the 48% you think is short covering, Tom? Very, very quickly.
A lot.
That's perfect.
Quite a bit.
Okay. Yeah. So, it's just software, right? So he's getting a little carried away. Jeff, what did you think about that clip?
No, I agree. When these deals are struck, there is a PR effort, and that really tries to make it look better for both sides. Like it's almost like it's this expansion mechanism of like, how do you make what we're kind of working on in terms of pen to paper? How do you make it look and sound amazing? Like, what are the words that could still be truthful, like the most, truthful, but how do you make it sound amazing? But when you get down to the core of it, that's where you really need to see and understand it. And I think there's still more work to do on this deal. I think they've agreed to high level terms, but I think there's still, in my opinion, I think there's still more work to do. There's still a lot of, there's either unknowns, and as they've both been interviewed, you can tell that there's kind of contingencies rolling on both sides. Because again, VW is smart. Like they've seen, okay, show me the deal history for Rivian. When you enter into a deal with a company, you'd want to understand like what is their deal history, how they operated, how they performed. And putting these performance milestones on, I think, are important because, hey, if we're going to put more capital behind you, we want to make sure it's going towards an effort that's actually converging on success versus an effort that is could be further deteriorating. And I would say it's been pretty rocky the last 1 to 2 years. While they've been able to ramp and get to some amount of scale, and the vehicles, people love their Rivians. When they buy their Rivians, they love their product. But you've got to be able to do the whole package. You got to be able to produce at scale profitably. So I think VW has their set of contingencies. But yeah, this deal is probably a little bit more narrow than what you normally see in PR, and that's not uncommon, unfortunately.
Okay. What'd you think, Brian?
I think it's crazy that people give me a hard time when I'm on the road, but Tom gets to use a rented cubicle with no grief. No, I think he's exactly right. I think his comment that they will just tell me how much of that is the short pressure, and the answer is a lot. Not all of it, but a whole lot of it, because when it starts swinging that big of a percentage in hours, you've got, if you could ride it out to next week, maybe you'll claw back some of those losses, but those are monumental losses in a very short period of time. Look, Jeff was saying, and I believe you're right, that we don't know the details. We can't know the details. It appears they don't know all the details. They haven't finished sorting it out, but I believe they're both very interested and willing to push forward to try and find a way to make this work. Otherwise, I don't think we'd have heard an announcement. I mean, I guess Rivian is under pressure with the earnings coming up, but they need to, they both need to make a serious move. Rivian to just survive and VW to move forward and actually make compelling products that can be sold outside of brand loyalty.
Okay, let's take some audience questions, get your answers to them. This Gustav said, Xiaopeng Volkswagen, when they did that partnership, it's for the software in China and maybe Europe. But the Rivian Volkswagen, that will be software in the US and maybe Europe. China doesn't like US software in China, and US doesn't like China software in the US. Both of you guys have quite a bit of knowledge on this. What's your thinking about this potential idea?
I think that's very correct. So I had a chance to hang out with Robin from Robin TV. He's a very, very big German language EV channel. And he said that there is a ocean of divide between the software that goes into the cars in China and that goes into the cars in Europe. And even when it's the same software, it has to be reskinned because the philosophy of user interface is even different. So there's a lot to be done before you even consider the data security privacy issues. So I think that could absolutely make sense, but I would have to think on it to form a more complete opinion.
Yeah, I've said for a period of time that this is going to be one of the things, software globalization, be able to put your product into anywhere on earth, and then people can sit in front of it and very quickly know how to use it, is something that very few companies have ever gotten right. There really isn't in the automotive world right now. I mean, honestly, of Tesla in terms of having kind of this global ubiquitous, operating system, and that's actually misunderstood and not talked about enough with Tesla, that they've actually developed their own OS. They have their own operating system, like an iOS, like an Android. There's Tesla operating system, and Tesla has to do very small changes. I say small relative to the size of the OS, but basically for local, it's called localization, and you've got obviously have to get the languages right. They've got to deal with a number of different things. But when you're talking about someone like a Xiaopeng, or you're talking about someone else, like their local software in China would be nothing in like Latin America or the US. Like they don't even have a starting point. So I've always thought that this would be one of the barriers for China to go global rapidly with their deployment, of EVs, would be the actual one of the bottlenecks would be their ability to localize software. It is not easy. It is not trivial, and it's something that really needs to be thought through when you're starting your company and you're starting your operating system kind of from the ground up. Am I going to be a global major player? So it's definitely a huge factor, and it's one of the bigger things out there. I agree with the comment. I agree with the comment here as well, and it's a big barrier to scaling.
Okay. Another one here is Rivian software cost is too high. Definitely can't provide faster or better software than Tesla. Yeah, but I mean, like, is he suggesting that Volkswagen should have partnered with Tesla for their software? Why do you think that? I mean, it's just the last thing that they'll ever do. Volkswagen just won't be able to be done.
I don't think it's Volkswagen who would be hesitant. I think it's that Tesla knows that anything that they would do in a partnership would have to be customized in some way for that customer, and they're just not interested. They don't have the headspace right now, is my opinion.
That's odd. That's opposite of what I've been hearing. I mean, you've heard Elon Musk say multiple times. He says, we're willing to license our software. He's not referring to just FSD, he's saying all software. However, their executives at Tesla did step up and say it's not just going to be software. Oftentimes, the software is so tightly integrated with the hardware, it's going to be a combination of both. But Elon has said multiple times, we would love to partner.
No, but Herbert, it's different. The larger OEMs have remember, Volkswagen is gigantic. If they are going to take a license on software, they are going to have an expectation of that we want it to look like X, Y. We want these changes. We want this, and this. And I agree with Brian's point here is that Tesla is not going to add bandwidth to deal with everybody's one-off issue. If I want it to look like this for my car, I want it to look like this for my car. I think they'll open up APIs and allow them to do X, Y, or Z. But what Tesla wants to license is less about the UI and more about the actual underlying tech of like, how do you get the power management we have? And honestly, the primary thing that they would be licensing would be FSD. It would be it's a different computer in the car, and they would be licensing that hardware and the software to support that on the infrastructure side and the vehicle side. I would think the vehicle operating system side of it is not a primary discussion that they're having with any partners, in my opinion.
So what I'm seeing from Rivian is what Volkswagen is getting is Rivian stock at a deep discount and the software for free. If they want Tesla software, they would have to actually pay for it and get 0% of the company, which is on paper a worse deal. The Rivian stock could actually turn into something. At the very least, it's worth vastly more than what the price announced was. So they would have already profit in it and stand to get free software that appears to be reasonably competent.
Okay. So I dare try to disagree with you, Jeff, because you definitely know more than I do. But I'm just pointing out that when you look at what RJ said, he's talking about partnership software, but also zonal electronics platform. I looked up zonal electronics platform. That is the wiring that connects not only the software. So I've heard the same thing with Tesla, them saying that, they would love you to use the same UI to be able to, imagine if your UI is everywhere, you can control it with the same app, right? You're not going to just, have FSD in some brand. You're going to use the same app. And the FSD is going to have to be connected to the steering and the brakes and all the other electronics that's in the car. So when it says zonal electronics, that's what I assumed that meant.
I don't think we're disagreeing with you. At least I'm not. But these extensions of the ECU, of the MCU, of all of it is still software. Having those, it's getting it all to talk to each other is, I think, the whole thing, and the zonal electronics is part of that.
Yeah, I'm not disagreeing with that. I don't know what we're even talking about anymore. I don't think Tesla's primary licensing venture is going to be full self-driving hardware and software. Mm-hmm. From there, it could grow into powertrain. It could grow into a number of other things, and it could grow into the 48-volt architecture, which would give you all of those controls as well. I'm not doubting that. But what they're going to set up is a basically a development vehicle of here, here's kind of a breadboard, or is a term used, but here's kind of a prototype of what you would do your development on. And if you want to connect and do your own UI or do whatever, that's fine. But Tesla's focused on that self-driving technology. They're not focused on retrofitting UIs for everybody in everybody's car. In terms of the app itself, the Tesla app, that is a different. That's a different thing right now. Right now the Tesla app is being made available for supercharging and so forth. So I don't know. It could go a number of different ways. I guess I'm not eliminating anything, but I think the primary path is around full self-driving, and the hardware and the software around full self-driving. Could have grown to other things possibly.
Okay. All right. So today we had Rivian announce that they have a partnership with Volkswagen. Beautiful cars, but they're suffering. They're just burning cash. They need to find a lifeline. RJ Scaringe and Oliver Bloom, the CEO of Volkswagen, basically saying that Rivian's going to get $5 billion. But as you saw in this episode, it's $1 billion. And the other 4 is tied to a lot of caveats before they can actually form a joint venture, which hasn't happened yet. And they're still in negotiations, actually. So this, you got to just take this with a grain of salt, everything we heard so far. Thank you, everybody. Thank you, Jeff, for joining us this quickly. And Brian, appreciate doing this co-stream with me today at Future Haza. Thanks, everybody.
Thank you
Bye-bye.
both. Thanks, everyone.